Cathie Wood from ARK Invest in a recent interview is still very bullish on Tesla. She's predicting a $25,000 Tesla vehicle will boost demand, and with robotaxis launching in June and full self-driving surpassing human driving safety by Q4, the outlook for Tesla is very positive. Meanwhile, 3 other institutional firms are saying the opposite. We have Bank of America, John Murphy, lowering their price target from $490 all the way down to $380. Goldman Sachs also cut its price target from $345 to $320, saying that they're expecting weak vehicle deliveries. And finally, so did Biard, who has now added Tesla to their bearish fresh pick. So who is right? We're going to ask this question to Larry Goldberg, have us evaluate what's Cathie saying. Is there anything new? And then what about these 3 institutional firms? Are they saying anything new? Welcome, Larry.
Thanks, Herbert. Great to be here.
So ARK Invest, Cathie Wood, you've been following them very closely. She was interviewed again by Yahoo Finance, and is Wall Street still underestimating Tesla? And it seems like they've really flipped at this point. Let's watch her interview.
Lastly, before we let you go, Tesla. I remember talking to you about Tesla 3 years ago out of my kitchen during the pandemic. So let me reconnect with you on Tesla. Now, sales have come under pressure. Overseas, namely. Some would say it's because Elon Musk has gotten close to the president. Are you still bullish on Tesla given what we have seen with Tesla sales this year?
So, obviously, the economy, I think one of the biggest things going on is the global economy is extremely weak. And sure, there are these political considerations, but we're split right down the middle. For every hater, you have someone on the other side. So I have no idea about that. But the 2 things that are going to happen this year, so this is not 5 years out, mañana, this year, they're going to, in the first half of the year, release their low-cost vehicle. Could be $25,000. No one, except in China, and the Chinese companies are not being allowed in here, but no one in the EV market in the US is going to come close to that. We think that's going to drive demand. The Model Y refresh, I went to go exchange my Model Y, which is on hardware 3, to a new hardware, a new Model Y with hardware 4 for full self-driving perfection. And what I love about Tesla, I go to the showroom and he said, oh, no, you don't buy that now. We're putting out a whole new refresh line, which, by the way, I knew and I don't know what I was thinking, but this is what they're telling customers. That's the right thing to do. So first thing is that low-cost car. I think there's a lot of pent-up demand. The second thing is autonomous. They're launching in Austin in June.
The Robotaxi.
Robotaxi. Yes, Robotaxi in the vernacular. So yes, they're launching in June in Austin. They just announced yesterday they'd like to start a ride-hail service in California. The regulators are tougher there. So I now think they're going to start seeding every state. And their FSD, according to our calculations, their robotaxis will be safer in the 4th quarter than human drivers are. Waymo that would be a critical intervention every 700,000 miles. We think they get there. And they're only at 10,000 now. That gives you an idea of how explosive AI is, right? Waymo's at 400,000. So we think they're going to have a cheaper car and a better autonomous robotaxi experience.
Still sound bullish to me on Tesla.
Yes.
Cathie Wood, CEO of ARK Invest. Always nice to get some time. Good to see you in person for a change.
Yay,
Thank you.
Yes. Thank you so much.
We'll talk to you soon.
Okay, so she said 2 things, right? More affordable car. She said $25,000. I don't know where she got that number from. And then you got the robotaxi. What's your thinking about her answers?
Well, the pricing of the lower price car is anybody's guess at this point. I think the people are around the 30,000 mark, the 25,000 mark. It's really an open guess. We don't know what's coming. It's very hard to divine. Tesla have been famously, very, very, very secretive about it. And we haven't yet seen even this, even the apparent appearance, in disguise or in mufti, we haven't seen anything. So it's unclear. So her guess is as good as ours. I don't think it needs to be $25,000. I think anything in the low 30 range would be pretty good for a starter, for an introduction. But I'm very excited to see it. I can't wait to see what they've done in terms of introducing new capabilities. It's a mystery to us right now, but it's coming, we're told, and I hope it won't be late. But it's pretty good news. I think the new Model Y is going to sell very well. So I think that the sales trough that we see now in general is going to be behind us by mid-year, particularly if we see, the release of the Robotaxi in the June timeframe as they're talking about. But, you have to look at the valuation work that ARK have done about Tesla to see where the prize really lies. Yes, Cathie's talking about all the good things that are going to happen this year, not in the future, but nonetheless that mid-century future, mid-decade future is looking very, very good. So the second half of the decade, we think, is going to do extremely well.
Yeah, I like the way the way that Cathie's looking at, right? First of all, Robotaxi launching in June, not next year. And then she said full self-driving, surpassing human driving safety by Q4. That is their estimate. And actually they had their chart where they showed that if Tesla continues to increase AI compute power, then they can see that milestone surpassing human driving safety by Q4. But Tesla has been saying that they think they're going to do it in June. They're going to do it like this second quarter of that. What's your thinking on that milestone?
I'm very confident of it. I've never been as confident about FSD and its capability as I am now. I drive it every day. Yeah. People talk about an intervention every 367 miles. I drove 2,000 miles with 0 interventions from here to Austin and back. So I'm very confident that they're on a path to autonomy and autonomy this year. We'll see. I mean, it's very interesting. There's a new release of FSD due very shortly. We've seen them training we've seen them testing the new release, which means that within 10 to 21 days, the early release will be out. Yeah. So we're on a path. We're on a very good path. And if you take the jump between 12.6 and 13.8, it's an enormous jump. It's a very, very considerable jump. So right now, I think all that remains is the parking lot behavior. I think that's really the sum total of where we are. And so I'm very, very excited to see the forthcoming releases. And I'm pretty certain that by the latter half of this year, we'll be driving autonomously.
Yeah, that's the difference, right? We'll compare the difference between Cathie and the other firms and how they're looking at it. But but I heard that by the end of this month, right, just as you said, the likelihood is the new release of FSD will come out. And it's supposed to have the 3 times compute. It's supposed to have the sirens, right? The emergency vehicles being able to hear. And then it's going to have the choosing the end destination parking, right?
Yeah, I'm not as sure as you are that the 3 times stack, the 3 times compute stack will be available in this next release. I'm less positive than you are, but certainly a great improvement on the current release.
Okay. So the difference between the other the institutional firms, which we'll cover, right? Why they're doing a downgrade is because they're expecting deliveries of vehicles going down. Right. Now, Cathie did not say if she thinks it's going up or down, but she's saying, hey, there's going to be a $25,000 Tesla vehicle. There's going to be some sort of more affordable vehicle released. Are you still thinking that the end of this year we're going to hit, basically the same flat? growth? Is it a lower growth? Or is it, as Elon said, he was still projecting 20-30% growth?
I don't give a rat's ass whether they deliver less, more, or more. I mean, I'm very focused on this transition that we're in and coming out of this transition. I am certain next year's growth is going to be back at the old levels. I'm very comfortable we are in this transition phase. I'm very pleased about the pace of FSD releases.
Yeah.
I'm extremely excited to see them hit the Cybertruck delivery dates, Cybercab delivery dates by mid-year. Look, it may slip a few months, but I'm as unfocused on this quarter delivery or last quarter delivery or the next quarter delivery as Wall Street is focused on it. So, it's just crazy. These guys still don't understand Tesla. And, and some of them are recommending Tesla. I have no idea, given their assessment of how they assess Tesla, why they would be recommending it.
That's a great point. I'm glad that you're bringing that up. I mean, it's all about FSD, and what happened. What happened last week was FSD in China, and FSD in China. All these videos, all the commentary, all of the evaluation has been so positive. People who were critics of full self-driving in China, critics of vision only, they're walking it back and they're saying, "Oh my God, this thing is surprising me. How much better it is." Remember, we were asking the question: Is it better than Huawei? Not better than Huawei? Is it better than Baidu? Yeah. Now we're knowing that it's better in so many ways that the general public there is getting to. They're getting very excited about FSD in China, right? That's the thing that we should be watching, and we are.
Yeah, and I didn't even discuss that in my considerations. Look, these were things we just assumed would be happening. No, we didn't actually. I thought that that Tesla would be the leader in Europe and the United States in terms of autonomy and in terms of, ride hailing. I just didn't understand that they would be able to release in China this early and this successfully. I'm not surprised about Tesla being better than the opposition. I think what the Chinese have done has been done very quickly and with scant kind of concern about some of the important safety factors, but we'll see. It's pretty exciting, I will say.
Yeah, so far so good in China. That's the eye in the prize. That's what you're looking at. But okay, let's take a look at what the institutional firms are saying. So you got Bank of America, John Murphy. He lowered his price target to 380 from 490, maintains a neutral rating. Of course, he's following the stock. Why do they do this? It jumps up to 480. We got to raise it to 490. If it goes back down to 380, let's bring it back again. So they reduced their price target. Then you got Goldman Sachs. They're a 320 price target, and they were at 345. So at least so that's the thing, right? If you go back here, that's a huge drop from 490 to 380. It's almost like, what? What?
You have to ask what was the basis of their raise in the first place? It made no sense, that raise, none at all.
Or that. Now that you said that, of course, you and I have covered this always whenever they do these things very clearly. Nothing has changed based on that raise. The raise was because of regulatory approval for FSD. They think that it's much more quicker. They're getting excited about autonomy. It wasn't because they think that the vehicle sales was going to go up and now it's going to go down.
Exactly.
For $110 difference. That's huge. So that was weird. But here's Goldman Sachs. They explain a little bit. At least they say the drop from 345 to 320, which is a bit more, so you can swallow that.
A little bit measured, yeah.
Weaker than expected vehicle deliveries in key regions and demand challenges. We lower our below consensus delivery estimates for Tesla. Quarter to quarter data for key regions. Believe broader demand trends. So that part, but I think they did talk about the transition to the new Model Y. I think I read that. That's most important if they say that. So they predict Tesla will report Q1 deliveries of 375, down from its previous estimate of 399. And that's fair. That's because of the transition to the new Model Y. So yeah, this is it. There you go. They did state that the transition to the new Model Y is the weak Q1. So that's fair. That's fine.
Yeah. Well, there are very few analysts on Wall Street that are judging Tesla on its new product range. I mean, you'd have to go to Dan or you'd have to go to, there are very few analysts that actually look at the full range of the Tesla projects and look at those projects and evaluate those projects. And even ARC are not actually doing a valuation model of the bot. They're of the humanoid robot. They're doing a valuation of FSD. Now, if they were to do a valuation of the robot, I mean, where does this thing go? And so the problem is Tesla is a public company. And that's the value for private investors, retail investors, that they can actually invest in a startup through the public markets. Otherwise, it's impossible to do that. So they're investing in Tesla, and they're taking a view of Tesla. We are taking a view of Tesla as a venture company, as a startup company.
A startup, yeah.
And we're looking at each of these ventures. We're assigning our sense of risk to each of these ventures, and we're discounting our estimate of those futures. None of Wall Street are doing that. And so their valuations of Tesla are pumped up because of the share price of Tesla. And then they add what they think is going to happen from the point of view of sentiment in the coming year. And then they put words around that. That's how I think they're acting. I don't think any of them have a tangible, reasonable model.
No, they don't. It's interesting. Okay. What's your thinking about I know that you already said you don't really care about these numbers, but there's all these news that's coming out saying that there's this dramatic fall in sales in Europe, in the US. Here you have, here they go, China have seen a mid-single digit decline year over year. Well, yes, it's a transition.
It shocks me that Goldman would say a thing like that, because Goldman must know that there's this model changeover and that there's the impact of the model changeover. What are they thinking?
It's weird. Okay, so now we've got this one is even worse. Biard now moving Tesla into the bearish fresh pick list. Near-term headwinds related to production challenges and demand uncertainty. Intra-quarter sales data from Tesla's key regions lead us to believe there's a risk to the consensus Q1 delivery estimate of 437. Of course, there's a risk. Oh my gosh. And that we're not going to hit the 437. Everybody agrees to that. Their updated delivery estimate is 369. It's already built in though. That is partly. You don't think it's built in, Larry? I guess these guys are now lowering it for the future when I think most people already understand there's going to be a tough Q1, right?
Yeah, look, I mean, there's no rationale. If they're looking at delivery and deliveries only, then you're right. It's already built into the stock price because this is no news to anybody. But on the other hand, it's amazing. We've been here before. We were here at the $200 mark. We're here at the $300 mark. We'll be there at the $400 mark. If the stock moves up, they get bullish, they ratchet it up, and they give excuses as to why they do it. If the stock goes down, they ratchet it down, and they give excuses why not. They're not looking at Tesla the way that the retail investors are and some institutional investors are. And so to look at Tesla from the perspective of vehicle deliveries is looking at the wrong fact, the wrong set of facts. That's all there is to it.
Or just the fact that, okay, you're going to change the price target and you think you're going to put them in the bearish now when because of volume production of Model Ys, but you got the brand new vehicle coming. You got every single month goes by, you're that much closer to a Robotaxi launch rollout. You're seeing FSD improving. So, and then the China
not in their book. They
Right,
don't.
which is weird, right? Like every month that goes by. Okay, here's an interesting point though that they made, and I wanted to get your thoughts on this. They said this: the analysts also highlighted key man risk related to Musk's broader political and cryptocurrency involvement. So we agree, right? You've had many discussions about this. The number one biggest risk for Tesla as an investment is key man risk. But is it worse today than it was, let's say, 6 months ago or a year ago, because of his?
I think I would have to say it is worse right now.
Okay, because you think more people want to
risk in the last since the election, well, since before the election, but potentially even more significant in the most recent few days, the level of bile and anger and hate that's directed against him and Tesla owners has added a risk factor to Tesla. It's added a risk factor
so it's more. Okay.
To his safety, and it's added a risk factor to, people say, well, they're picking up as many supporters as he's getting haters.
Mm-hmm.
That may or may not be true. I don't know. Time will tell. I certainly haven't experienced it for myself. I just did this big road trip. Everywhere I went, I got a lot of thumbs up. I got a lot of people, very excited about the Cybertruck. But I've seen a lot of stuff online that is very disturbing. And so I think there is a factor here. I'm not sure that factor, I just want to say I'm not sure that factor has an impact on the stock in the long term. But it definitely is a risk, a safety risk to Elon. Without doubt, it's a safety risk to Elon. There are a lot of crazy people out there, a lot of hatred out there. And it is somewhat of a safety risk to Tesla drivers. A lot of Tesla cars have been, marked with very serious, in very serious ways. And a lot of buyers, natural buyers for Tesla, have, they've stepped back. Now, there may be a lot of new buyers. We haven't seen those yet, but that could be coming. So there is a risk that we shouldn't overlook.
How does that work with price targets, though, right? So you're investing in a company, and there's a key man risk. Key man risk is typically, and specifically for Tesla, I can imagine that it's really high. It's the most important risk of investing in Tesla, because Tesla's known as Elon. Elon's known as Tesla. He's such a big contributor to the company. I get that part. But do you now, because the threat levels increase, that lower your price target? Okay, and walk me through it. What would happen?
I think there is. I think the key man risk translates in several ways. One is strategic. Elon is the drive behind the company. If anything happens to him, that would affect the stock price and the company seriously, but the stock price very seriously. The second is his attention on the company. It's fair to say that he has a very significant job in Doge and that he's spending an awful lot of time on it. And if you rank his time at Tesla as being valuable, there's a markdown right there, because we're investing in Tesla for the future. The future is really architected by Elon. Now, I happen to believe that the architecture he's doing for the firm will not go away, and that he'll be quite capable of executing it, particularly the team he has in place. But other people may judge that differently. And then the third risk is sales. I mean, your natural buyer is now pulling back. It could impact the sales. Now, as it happens, we're in the middle of this big model change, incredibly huge model change, 4 factories at the same time. And so it's affecting sales in a brief period of time, and it'll affect gross margin as well. So this is going to set to be a really bad quarter. And so should he be present during that period of time, and so on and so forth? Anyway, that's how they judge this whole, key man risk.
I like the way you did that. You very nuanced. You listed 4 things you're looking at, and a couple of them I didn't even consider. So that was great. What would happen? if something bad happens. So I would expect personally that it's the most important thing that's going to impact the company and the stock. It'll probably go down 70%, like huge reaction. I think over time, the company's not going to die. The company's led by 120,000 employees. It's not like all of a sudden, Tom Ju can't run the factories like he is running the factories. They've already got, like, is it going to stop and delay autonomy? Is it going to stop and delay the bots? Some, but not to the point where the stock will still not grow significantly. So if it drops by 70%, to me, I would still buy, even if Elon's not part of it anymore. What's your evaluation of that?
Well, I would have to. So I think there is a succession plan in place.
Mm-hmm.
I think the succession plan may not be as explicit as perhaps some succession plans would be. I think Jared probably has the succession plan, fairly much under lock and key and would probably execute it. I would not be surprised to see some former Tesla senior people come back in or be brought back in. I believe the current management team is outstanding. I mean, I have a little piece that I'm doing on it. I've been looking at all the people in their places, really outstanding people, as good as it's ever been, I think there's a case to be made for Straubel to be brought back in and some sort of combination of Redwood and Tesla to be made. That would please me no end, but I don't think it's critical for the future. The point is that without Elon, we don't have a visionary there, and Straubel is anything but. I mean, he's a visionary if he's anything, and he happens to be a great battery scientist as well. So I think, that possibility is in the back of my mind. Nobody's mentioned it to me before, but it would be a great thing. So I do believe there is a succession plan in place. I do believe that if anything were to happen to Elon, they would enact on it. But I think you're right. I think the price would go down by 70%. It would be a great buying moment. Whether I would buy or not is a relatively open question. In other words, I wouldn't jump on it because the price has gone down. I've got a fairly significant position in it right now. I'm very happy with my position. I think that if something happened to Elon, it would be a temporary impact on the stock.
That's what I'm saying.
So that's my position.
Yeah, agreed. Okay, so we got Biard here. So they still remain long-term positive in Tesla due to long-dated initiatives like Optimus and Robotaxi and ramping sales. They lowered their price target to $370 from $440. That's what they've done. So I'm sure they're going to raise it again in a month.
So one of the factors across this entire conversation is that the macro has deteriorated very dramatically in the last 2 weeks. I mean, we've seen the interest rates sink now to below, the target level for the Fed. We're the unemployment number is going to come out tomorrow. It's going to be a shocker because we've had at least 26,000 people fired from the federal government, but it is going to be a shocker. It's going to be a surprise for everybody. And so there is generally a derating of a lot of stocks, and Tesla is in the very Tesla's current sales are in a very vulnerable position because car sales are always the first hit in a recession. So, and of course, Tesla was re-rated down together with all the top stocks. Well, it's the same thing as I was saying earlier. So, I'm not surprised at the re-rating down. I'm surprised at the depth of it. I'm surprised at some of the statements made about it. But I would be more comfortable if I would see a re-rating across all of the Magnificent Seven, or even across, the whole of the market.
Yeah, that's the best point you've made, I think, is that if they had just said, we're re-rating it, we're bringing it down because the economy is looking weak, that's great. You're right. I would agree with that. That's what it is. Thank you very much, Larry. Follow him on his X account at TESLA Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.